So let's begin. Right, now the question that I've chosen for today's lesson obviously focuses on the cash flow statement, but I've chosen a question where we're also going to take a look at a whole lot of calculations. Okay, so our cash flow statement together with calculations. Right, as usual, you're going to be given lots of information. Make sure that you're familiar with that information before you start answering the actual questions. So let's begin by looking at our information that is given. The following information was extracted from the income statement and notes of Bharat Limited on the 28th of Feb 2020, which obviously has to be the current year. So I'm given dividends paid and declared. So remember, this is my total dividend for the year. In other words, this is my dividend expense for the financial year. Then I'm given income tax, another expense, interest expense and depreciation on equipment. So immediately I notice they're obviously not giving me the entire income statement. It's just an extract of the income statement. Then I've got in front of me an extract from the balance sheet, and they're giving me 2020, which is the current financial year, as well as 2019, which is obviously the previous financial year. Now guys, please remember, very, very important, remember the previous financial year is obviously 2019, or rather the 1st of March 2019 is the beginning of the current year. 2020 is obviously the end of the current year. Right, so I've got an extract from my balance sheet, and then as expected, additional information. So I'm just going to glance through this information for now. Obviously, we're going to read through this in much detail as we're doing the actual cash flow statement. So information number 1 deals with tangible assets. Information 2, trade and other receivables. The next bit of information, trade and other payables. And if I go further down, okay, let's go to the next page. Then I've got information 4 that deals with new shares that were issued during the year. Okay, so that's my information. Let's now look at our answer sheets and what are we expected to complete. So we've got firstly, complete the note cash generated from operations. Normally this is your note 1, right? Lots and lots of marks for this particular note, right? And then we are going to complete the cash flow statement. Now remember guys, there's obviously quite a bit of calculations involved, so it should take us an hour to complete this question. Right, so let's begin. We're obviously beginning with the note cash generated from operations. Okay, I just want to scroll down because there was another question, but obviously we'll come back to that. So let's now begin with the note, complete the note cash generated from operations for the year ended 28th of Feb 2020. Right, so we're going to start off with profit before tax. Let's just take out that S. So your profit before tax, and immediately I obviously need to go to my income statement. But if I look at my income statement, as I can see, they're obviously not giving me profit before tax, nor are they giving me my profit after tax, and I haven't even come across the taxation rate. So immediately, how am I going to calculate my profit before tax? Now, often students immediately find, oh my God, what do I now do? But hang on guys, it's simple, it's very, very straightforward. So you've got two options. I can either redraw or draw up my retained income note, or I can use the following equation. Okay, so what equation am I referring to? So when I'm calculating net profit before tax, and I'm going to write it up here. So profit before tax, if this amount is not given to you, right? You start off with income tax. So you're going to take your income tax. You will then add your dividends for the year, interim and final, your ordinary share dividends for the year. If there was a buyback of shares, you will then add the buyback that affected retained income only. So here I'm referring to buyback above average price. You will also add back retained income at the end of the financial year minus retained income at the beginning of the financial year. Okay, so you've got the option of using this formula, and often I find students that use this formula, they end up getting full marks, or they get the calculation profit before tax correct. Okay, so let's begin using this formula, and I'm going to use brackets to show my calculation. So I'm starting with income tax for the year. So let's go back to our information. My income tax for the year, an amount of 75,000. So let's take that through. 75,000. To my income tax, I am then going to add dividends for the year, my dividend expense for the year. So remember, this is your interim plus your final. So dividends paid and declared for the year, an amount of 20,000. So let's add that, an amount of 20,000. Right, buyback. In this particular question, if we scroll through the information, let's quickly go back to our information and let's look further down. I think it was at the top of the next page. Okay, right, so looking at information 4, new shares were issued during the year. There was no buyback of shares during the year. So I can ignore buyback because obviously there wasn't any. Right, retained income at the end of the financial year. So let's go to our balance sheet. And remember, retained income at the end of the financial year. Be very careful that you do not confuse beginning of the year with end of the year. So an amount of 137,250. I'm going to take that through. So plus 137,250. And then finally, I'm going to minus or subtract retained income at the beginning of the financial year. So let's do that. Let's go back to our information. Retained income at the beginning of the financial year, 92,000, which needs to be subtracted. Right, now as you can see, I've basically reconstructed the retained income note. That's all I've done, guys. Now, if you want to, you can draw up the retained income note, but I often find it's very time consuming, and therefore I recommend that you use this formula. Right, so let's get our calculator out and let's quickly calculate. Okay, I'm just going to move that a bit so that I can see my figures. So I've got 75,000. And 275,000, I'm obviously adding my 20,000, right, plus 137,250, and then finally minus the 92,000, and that should give me a net profit before taxation amount of 140,250. So let's fill that in. 140,250. Okay, shouldn't have been difficult, but like I said, often something like this stumps students. But remember, guys, if that ever happens, you need to breathe, you need to relax, and obviously think. Right, let's now move on to the next part of the note, adjustments 4. Remember, we're going to have to add back depreciation because it's a non-cash item. And we also have to add back interest expense because this is subtracted later in the cash flow statement itself. So let's go to our income statement, depreciation on equipment, okay, given to us. We don't have to calculate it, 31,250. So I'm just going to take that through, 31,250. And then I've got interest expense. So again, back to my income statement. And as you can see, interest expense is obviously given to you. So your interest expense, an amount of 25,000. So again, let's take that through, 25,000. Right, now please remember guys, sometimes interest is not given to you, depreciation might not be given to you, and in that case, you'll have to obviously calculate these amounts. Okay, right, so far, not so bad. Let's now calculate our profit before changes to working capital. So please remember, you are adding depreciation and you are adding interest expense to get profit before changes to working capital. So let's do that. We're obviously adding, let's just move that quickly. So we are adding depreciation 31,250, and then we are also adding 25,000 to get an amount of 196,500. So I'm just going to fill that in, 196,500. And this is normally a method mark, so don't leave it blank. Make sure you fill in that amount. Right, changes to working capital. Now remember, what makes up working capital? Buying of inventory, right? Your debtors as well as creditors. That's what makes up working capital. So in that order, we basically going to look at from one year to the other, has this changed in terms of inventory, debtors, and your creditors? So I'm going to leave a bit of space and I'm going to fill in this order, inventory, the change in inventory, the trade in debtors, or you can call it trade and other receivables, as well as any changes to creditors or trade and other payables. Right, so let's start off with inventory first, and obviously I'm now focusing on the balance sheet. Okay, so if I look at my inventory, I am comparing 2019 to 2020, so clearly I can see that when I compare last year to the current financial year, there's been a decrease in inventory. So let's start by filling that in. So there's been a decrease in inventory. Let's go back to the balance sheet. Now, a decrease of how much? So remember, I obviously need to subtract. Okay, so let's do that. So there's been a decrease of 103, okay, 750 previous financial year, minus the balance of inventory for the current financial year, 72,500, and there's been a decrease in inventory, 31,250. Now, what does that mean? So remember, in your cash flow statement, 31,250, you basically bought less stock in this financial year, or you're keeping less stock at the end of this financial year. And remember, money is now staying in your bank account. So this is an inflow of cash. This amount of cash is staying in your bank account. Obviously, this is a positive value in terms of working capital. Right, let's now move on to debtors. So let's go back to our information. And if we look at debtors, obviously the focus is on trade and other receivables. So they are specifying that I need to see below, obviously, additional information. So let's do that. Let's go to trade and other receivables. And this is made up of debtors as well as SARS income tax. Now remember guys, when you are doing this part of the calculation, you need to obviously take everything into account in the note trade and other receivables, except for SARS income tax. You need to leave out SARS income tax. So what am I referring to? You're going to include debtors, you're going to include prepaid expense, you're going to include accrued income, right? but you will exclude SARS income tax. So in this particular case, because we're going to exclude SARS, our focus is only on debtors. Right, please remember, if you had prepaid expense, you're going to include prepaid expense. You will add prepaid expense. Same with accrued income. But in this case, I know I'm repeating myself, but I think it's important. The focus in this case is just on debtors. Okay, so when we compare 2019 to 2020, it's clear that there's been an increase in my debtors. Now, what does that mean? An increase in debtors, I am selling more on credit, or rather, my debtors are owing me more money, and as a result, this represents an outflow of cash, because remember, the payment is probably not coming in. I'm selling more on credit, and as a result, I am basically financing my debtors. So money is leaving my bank account. In other words, it is an outflow of cash. Okay, so an outflow of 6,000. So let's fill that in. Let's go to the note. So if you look at your debtors, there's been an increase in debtors. Let's just go back to make sure that you understand. So looking at debtors, okay, as you can see from previous financial year to the current financial year, there has been an increase in debtors, an increase of 6,000. And that 6,000 represents an outflow of cash because basically I'm selling more on credit. I am financing my debtors. Money is not going into my bank account. Remember, I am the company. Okay, right. And then finally, we are now focusing on creditors. So let's go to back to the balance sheet, trade and other payables. And once again, they're telling me to see below. So let's do exactly that. Let's go to the next bit of information, trade and other payables. And here, please remember, guys, you will obviously include everything in trade and other payables except for shareholders for dividend needs to be excluded. SARS income tax also needs to be excluded. So remember, in this particular case, the focus is only on trade creditors, but in other exercises, you will also include accrued expense, you will include deferred income or income received in advance, medical aid, pension fund, etc. Okay. Right, so let's now compare last year to this year, and we can clearly see there's been a decrease in our creditors, right? We obviously owing less. So let's fill that in. Okay, creditors, there's obviously a decrease in creditors. Now, how does that impact on cash flow? Now, remember, if you are paying your creditors sooner, what does this mean? The sooner or the faster you pay your creditors, money is now leaving your bank account. In other words, this represents an outflow of cash. Money is leaving your bank account. Right, so let's quickly calculate. I can't do this one in my brain. I need a calculator. So let's get the calculator out. So if we compare the 141, 250, right, minus the balance owed to creditors at the end of this financial year, 43,750. Okay, we're getting an amount of 97,500, and as I explained, that amount of money is now leaving your bank account. Okay, so let's go to our note, in brackets, an outflow of cash, an amount of 97,500. Okay, right, almost done with the note. Let's now calculate finally my cash generated from operations that I'm going to take to the cash flow statement. Okay, so all I'm doing is profit before changes to working capital, right? I'm then going to add my decrease in inventory. I'm going to minus the increase in debtors. I'm going to also minus the decrease in creditors. So let's do that quickly on our calculator. Going to quickly clear that. So an amount of 196,500. Okay, I'm then adding 31,250. I'm minusing the outflow of 6,000, and I'm also subtracting 97,500, and that gives me an amount of 124,250. So 124,250, and this is the amount that I now take to my cash flow statement. So let's do that. Your cash flow from operations, an amount of 124,250. Okay, right guys, so 16 marks. Okay, remember note 1 is often tested in your exam, so please make sure you know this note, because remember, we want you to get those marks.